The IRS just reported a record $4.9 trillion in tax collections for the 2025 fiscal year. And if you're a W-2 employee, you basically provided the catering and the open bar for their victory party. Think about this. A single mother working 2 jobs, clocking 70 hours a week just to keep the lights on, hands over 30% of every hard-earned dollar to the government. Meanwhile, a billionaire sitting on a private jet with a 9-figure portfolio legally pays close to zero. That's not a conspiracy theory. It's the documented, factual reality of the 2026 tax code. Welcome back to Future Freedom 360. I'm your host, and today we are performing a forensic audit on the biggest scam in human history. The idea that working hard and paying your fair share is the path to wealth. Following traditional financial advice in 2026 is like bringing a butter knife to a drone fight. You aren't being a good citizen, you're being an easy target. While you're eating lukewarm ramen to save for a tax bill, the wealthy are using the tax code as a blueprint to build skyscrapers. Today, we are firing the experts who told you to just be a good employee, and we're hiring the math. If you want to stop being the government's favorite ATM, don't click away. This next will be the most expensive education you never got in college. Part 2. The Compliance Factory. Why you were never taught this. Why is it that you spent 16 years in school learning about the mitochondria and the Treaty of Versailles, but not a single hour on how to read a tax bracket or structure an LLC? It's because the modern school system wasn't built to produce innovators or millionaires. It was engineered during the Industrial Revolution to produce compliant, productive employees. Think about the architecture. You sit in rows. You wait for a bell to tell you when you can eat or pee. You are graded on your ability to follow instructions. In 2026, the perfect student is the perfect taxpayer. The system needs you to be just smart enough to run the machines and do the paperwork, but not smart enough to realize that your paycheck is being cannibalized before it even hits your bank account. Following 1980s debt advice, the get a degree and save your pennies talk is like trying to navigate a self-driving Tesla with a paper map from 1995. It doesn't work, and you're going to end up in a ditch. Part 3. The Income Trap. Labor versus assets. Let's look at the 2 types of money in America: earned income and unearned income. Earned income is the money you trade your life for. It's your sweat, your sleep deprivation, and your time away from your family. In 2026, under the latest One Big Beautiful Bill adjustments, the top federal marginal rate sits at 37%. Add state taxes in places like California, and you're surrendering over 50% of your top bracket. You are literally working from January to June just to pay the government for the privilege of working. Unearned income is money generated by assets, stocks, real estate, and Bitcoin. This is taxed as long-term capital gains, which tops out at 20%. Do the math. Why is the person who works taxed twice as much as the person who owns? Because the tax code isn't a list of punishments, it's a list of incentives. The government wants you to build businesses and provide housing, so they reward owners and penalize workers. If you stay in the W-2 lane, you're playing a game of poker where you're taxed on every hand you play. But the guy across the table only gets taxed if he decides to leave the casino. Part 4. The Buy, Borrow, Die Masterclass. This is the holy grail of wealth that your HR department doesn't even know exists. It's called Buy, Borrow, Die, and it's how the top 0.1% stay there. Buy. You buy appreciating assets. In 2026, the smart money is moving into Bitcoin and cash-flowing real estate. Borrow. Here is the magic. When a billionaire needs $10 million for a new mansion, they don't sell their stocks. Selling is a taxable event. Instead, they go to a bank and say, "I have $100 million in Bitcoin as collateral. Lend me $10 million at 4%. The bank says yes. Guess what? Loans are not taxable income. They get the cash, keep the asset, and the IRS gets exactly zero. Die. Under IRS Section 1014, when you die, your heirs get a step up in basis. If you bought Bitcoin at $10,000 and it's worth $1 million when you die, your kid's cost is now $1 million. That $990,000 gain? Wiped out. Never taxed. Not once. The wealthy literally live off debt to avoid taxes on wealth. It's a closed loop of prosperity that you were never invited to participate in. Part 5. The 3 Legal Shields. Your 2026 Action Plan. Shield number 1. The business entity, pre-tax living. Why do billionaires own nothing personally? Because a human is a liability, but a corporation is a fortress. In 2026, the corporate tax rate is a flat 21%, but the real power is in deductions. A business spends money on travel, tech, cars, and professional development before it pays tax. You, the employee, pay for your life with leftovers after the government takes their 30%. Actionable tip. If you have any side income, consulting, YouTube, selling on Amazon, form an LLC yesterday. Stop paying for your life with post-tax dollars like a hobbyist. Start spending like a CEO. Shield number 2. Real estate and the phantom loss. Real estate is the most tax-advantaged asset class in the U.S. Code. In 2026, thanks to the OBBB Act, 100% bonus depreciation has been permanently reinstated. This means if you buy a rental property, you can use a cost segregation study to write off a massive chunk of the building's value in year 1. You might make $50,000 in real rent, but on your tax return, you show a $100,000 loss. You're getting rich in reality while looking broke on paper. It's the only place where you can be a millionaire on Monday and a tax loss on Tuesday. Shield number 3. The Bitcoin Roth IRA, the ultimate exit. This is the Future Freedom 360 special. Bitcoin is classified as property by the IRS. If you hold Bitcoin in a normal account and it goes to the moon, the government is your 20% partner. But if you hold it in a self-directed Roth IRA, every single cent of that gain is tax-free forever. If Bitcoin hits $1 million inside your Roth, you can withdraw it at 59.5 years old and pay $0 to the IRS. You've used the system's own rules to build an exit ramp from the system. Part 6. The 2026 Fraud Radar. Protect your neck. Visual pattern interrupt, red warning screen. Because you're waking up, you are now a target for a different kind of predator, the tax guru. In 2026, the IRS Dirty Dozen list is full of these scams. The offshore mirage. Someone tells you to move your money to a shell company in Nevis to pay zero tax. Wrong. U.S. citizens are taxed on worldwide income. If you don't file your FBAR for foreign accounts over $10,000, the penalties start at $16,000 and go up to 50% of the account. The sovereign citizen trap. People claiming you can revoke your social security number to stop paying taxes. This isn't a strategy, it's a felony. The IRS calls these frivolous filings, and they come with a $5,000 fine per letter plus prison time. The fake church shelter. Trying to turn your home into a 501c3 to write off your groceries is a great way to spend the next decade in an orange jumpsuit. Real tax strategy is about restructuring, not evading. It requires a qualified CPA who knows the 2026 laws, not a guy on TikTok with a rented Lamborghini. Part 7. The Wise Money Mindset. The Velocity of Wealth. The deepest truth is this: the tax code is a set of rules, and like any game, the people who read the rule book win. The wealthy don't avoid taxes because they are evil or greedy. They avoid them because they are literate. They understand that the government wants them to invest in the economy, so the government makes it cheap to do so. If you stay as a W-2 employee, you are playing the game on insane difficulty, with half your health bar missing. The second you move toward assets, towards Bitcoin, towards business, towards real estate, the game switches to easy mode. Wealth isn't about what you earn. It's about the velocity of your money. How fast can you move a dollar from taxable income to tax-free asset? Part 8. Conclusion. Your financial exit. The 93% of people who retire poor didn't fail because they were lazy. They failed because they played a rigged game with the wrong strategy. But you? You now have the blueprint. You know about buy, borrow, die. You know about the Bitcoin Roth IRA. You know about pre-tax living. You have the keys to the cage. Comment challenge. I want to hear from you. What is the one tax fact you were taught in school that you now realize was a lie? Drop it below. I read every comment and I want to see the debate. If this video opened your eyes, hit that like button and subscribe to Future Freedom 360. We don't just report the news. We give you the weapons to survive the 2026 economy. And next, you need to watch why your savings account is a wealth trap. The link is on the screen. Take the keys. Take the power. See you in the next one. Future Freedom 360. Let's build.